In this weekly SMC Outlook, I'm sharing my exact trade plan for the DXY, the Euro, the Pound, the dollar versus the Swiss franc, and also gold. So my name is Justin Bennett, Forex trader since 2007, full-time since 2011. As always, all of this is my opinion only and not financial advice. So let's get into the DXY here on the 4-hour time frame. So last week we did have the markets open with a gap. So here we had the US dollar gapping up. You can see this right here was the weekend gap. And from this point here, really the market didn't look back. We didn't close the gap. And instead the US dollar just took off here with everything going on in Iran. So right now though, you can see that we do have a really nice structure for the DXY here. And this is what we've had going all the way back here to late January. So we've talked about this in every video where so far you can see we've got the lows down here and we have these highs up here. Okay, so really this is kind of the structure that you're looking at. And anytime that you can plot a channel like this, because markets, revolve around a mean. So anytime you can plot a channel like this, it is going to make your trading a lot easier. Okay, it's going to give you a lot more structure to your overall trading if you know that this is what the market is doing. Because we know that if the market does come back here to fill this imbalance back here in this area, that this could be a potential buy for the US dollar. And we also know that any acceptance below here over the coming weeks could potentially lead to a weaker US dollar. Okay, so right now you can see that the external structure here for the DXY is as follows. We have the change of character that occurred back here. So we had the close above. Let's go to an hourly time frame and move back here. You can see this here, the change of character. So above these highs back here, we got the change of character. This was our external low. And then from that point on, we really just had a case of the market carving higher highs and higher lows. So that brings us to what we saw last week. We saw the market come up here and test this area, okay? So since this time though, on really Tuesday of last week, the DXY then just went sideways. I mean, it was a very volatile week to start, and then really it was just very sideways from there. So not a lot of opportunities last week unless you were able to get in on this run up, because really from here, guys, it was really just a very sideways market for the better half of last week. So what are we looking for next week? Well, I'm looking for the DXY to potentially pull back here toward this area. So what we can do from here, knowing that this is our external low down here, external high up here, what we can do is take our fibs, and I have a modified fib. I've made a video on this before, how I did this, but basically my fibs show me here the 50% with everything below 50% being discount. So this green area down here, this up here is premium. And then this dark green area is what's called optimal trade entry. This is the area between the 62% and 79% retracement. So what I'm looking for with the DXY is with this consolidation, okay, if we get the pullback here from the US dollar, because so far what you can see is that we have really two main imbalances back here. So first we had from last week's rally, we had this imbalance right through here. Okay, so this one right here on these candles, you can see the displacement out of here, and we had the DXY come back here and mitigate that. Now, the other one here that's also very obvious is this one way back here. Now, what you'll notice is that this imbalance lines up with OTE. Okay, so that optimal trade entry of the external range here does line up with this imbalance. So what I'm looking for is the DXY to potentially move back here to mitigate this area. And then from here, I'll be watching for a lower time frame change of character to potentially play a US dollar long. Now, like I said before, if we were to start to, violate this channel and move down here, and especially start to take out some of these lows, then that could of course change things. But as long as we have an uptrend here for the US dollar, then that's what I'm looking for. Now, there is no guarantee that we do come back here in this area. This could be it. But so far, as long as we're just going sideways up here and we haven't taken out this external high, then in my opinion, this down here is going to give you the best risk reward ratio if you're looking for US dollar longs. Okay, so really the area around 98 is going to be one to keep an eye on next week in case we get it. So the way that plays out here for the euro, obviously, pretty much the inverse of the DXY. You can see that we do have this descending channel, very similar to DXY as well, where we have these highs up here. We've seen lower highs and lower lows from this market ever since this change of character back here. So we had the close below, the lower high, we had the BOS here, we had the external high up here, and now we have our external low down here. So for the euro, the way this looks is, again, very similar to the DXY. This is essentially the inverse of that. You can see that this high up here, the way that we find our external high and low is we take our last BOS, which was this back here. Okay, so break of structure here, we have external high being this one because this is the highest point within this price action. Okay, so this high up here is the highest point, so that's our external high. And we know that this is down here is now our external low because even though we haven't really bounced much here, we do have the euro coming off of this area. So tentatively, we can use this as our external low. Now that matters because when we go to draw our fibs here, we have this high up here, we have this low down here. And what you'll notice is that OTE also lines up with an imbalance for the euro. Okay, so this entire pocket up here is going to be an imbalance for this market, to where, in my opinion, if we do see the euro come up here, I will be looking for a lower time frame shift to get short here to play this downtrend. Okay, and also very similar to the DXY, we had really two imbalances back here for this market. So this is the 4-hour time frame, but you can see that we had displacement through here. Okay, so on these candles right there in OTE, and then we had displacement on these two candles as well. So this has been mostly mitigated with last week's price action. This up here though is still open for business. So really, I think that, and again, there's no guarantee that we see this, but I think that if we were to see the euro climb up here toward this area around 1740, 11760, if we were to see this sometime next week, then that could potentially be an opportunity to look for shorts from this area up here to, once again, kind of play this downtrend. Now, what'll be key from here, though, is to watch for some kind of shift, right? You have to have the market giving you the BOS, okay? So it would be, BOS above one of these highs, and then the market taking out that low to give you that shift and then looking for shorts. And if you want all the details on how I trade SMC full-time, check out the link right here on the screen. That is going to give you a full SMC course where I hide nothing. I show all the details of exactly how I trade SMC. And this is content that you will not find on YouTube, so be sure to check this out. If you don't see the link here, then check out the link in the description. Okay, so let's move on here to the pound. All right, so also very similar to the euro, we have this downtrend here with these lower highs and lower lows. And so far you can see the pound is a little bit ahead of the euro in terms of coming off of this low. Okay, so right now you can see that we are moving higher with Friday's close. So you can see same thing, external low down here, external high up here. So what we can do is if we draw out our fibs right from this level up here down here to the low, you can see where OTE in this case lines up with the gap. So this was that weekend gap. We closed up here, we opened right down here, and we never really closed this gap. Now, it doesn't mean that we will, and I want to be clear too that optimal trade entry, this area up here is just kind of my ideal area where I like to look for a change of character on those lower time frames. But I will still short a market if we don't, fully come into this area. So in other words, this right here, I'm treating this really as my imbalance from up here all the way down here to this high. So if the pound next week were to just come to here, right, then I could still look for shorts here. It would just be a matter of looking for lower time frames for that change of character. That's what's key. That's my confirmation. So the point here is that I don't need to see this entire, area up here mitigated. I just need to see the market move into premium above that 50% line and start to mitigate some of this imbalance. And then from there, I can look for a lower time frame change of character. Okay. So very similar to the euro right now, if we go with what's on the chart, what is on the chart is a downtrend. So as long as this is the case, I will be looking for shorts. But again, that confirmation from these areas up here, this open imbalance, is going to be key next week. And, just like everything else too, if we were to see the pound and the euro start to take out these areas and take out some of these highs back here, then that of course could start to shift this downtrend into an uptrend. But again, it's really important to trade what is on the chart, not what you think might happen, weeks from now. Okay, so let's move on here to the dollar Swiss franc. And I'm going to show you too why the US dollar really pulled back last week. Because what you'll notice here on the hourly time frame, you can see that if we go back, we have this change of character. So on the way down, we had these highs, we had the close above. Now, since that time, if we walk this over, you can see that we had a higher low that developed. Now, this also too was a lower time frame change of character. And in fact, we talked about this in Discord where you had this move below, you had the close above here, you had the higher low that formed, and then from here we got the uptrend. So we talked about this in Discord in real time, and that's the advantage of being in Discord as a VIP member. And then last week, what you'll notice is that we had a BOS. Okay, so the moment that we close above here, we do have a bullish breakup structure. So overall, since this low back here, this pair is bullish. Now, obviously, if we look back here and go to a 4-hour time frame, you can see that this shows a very different story. So here's what's key. Last week, we saw this market come into this imbalance back here that we've talked about. So I mentioned this in the last few videos, and this up here was an unmitigated imbalance, and we really mitigated most of that last week. So I think what's going to be telling for this pair next week is going to be, what we get down here, because for this to stay constructive, what we have to see now is this up here. Okay, so let's go ahead and change this because I still have it down here at this low since I really haven't traded this pair. You can see that this low down here is our new external low. So what that means is that if we take our fibs once again from the low to the high, you can see that OTE comes in down here. Now, this doesn't mean the market's going to reverse from here because markets don't care about OTE. That's not why markets reverse. but this right here is just my outline showing that we are now in discount. So really, when you look at this and you see these imbalances back here, I mean, really this entire area back here is just one big imbalance. So I think if we're going to see this market rotate higher, okay, and give a higher low and the US dollar stay bullish, then this area down here really is the one to watch next week. Okay, so this is where I'll be watching for, again, that lower time frame shift, right? Something on the 15 or 5 minute time frame to watch for that shift somewhere down here after we mitigate some of these imbalances. Now, with that said, I also want to be clear that if we do not get that lower time frame shift and this market were to take out lows like this down here following last week's BOS, then that of course could change things, drastically. And the reason I point that out too is because what I want to show you is if we go out here to a daily chart, okay? So what you're going to notice is that these lows right back here, so really going all the way back here to this low, what you'll notice is that last week we did get, in fact, I'm going to go to a weekly time frame. This will show it even better. Last week, you can see right here, we had lows along this level. Okay, so lows through here, this low down here, we wick below, this low, this one, these lows through here, and then displacement on that breakdown. Now, what you'll notice is that last week's high did test this level, okay? So my point here is that this is a critical moment for the US dollar. So it's going to be really, really important when we look at an hourly time frame. It's going to be really key to see areas like this down here. Okay, so this imbalance that you see here, displacement out of this, it's going to be really important to see this imbalance back here hold and to get that lower time frame shift to show you that buyers are still in control. And the reason for that all comes back to the fact that this high from last week tested a critical level on the weekly time frame. Okay, so there is a chance that this could be the top. So we need that confirmation on those lower time frames to show us that this market is going to stay constructive, because otherwise, like I said, if we start to take out lows like this down here, then that of course could shift this market bearish once again. Okay, so let's go ahead and wrap up here with gold XAUUSD. And this one is interesting in the sense that last week, the week before, what I talked about was this candle right back here. So 4-hour time frame again, this candle right back here. This was the imbalance that I pointed out. And what I said is that if you watch for a change of character up here, this could potentially trigger a rotation lower for gold. And what you'll notice here is if we go to an hourly time frame, you can see that we got exactly that. So looking up here, you can see that off of this high right here, okay, so this was internal, this was an internal BOS. And then from here, what we had is this low being taken out. Now, it was a little bit tricky because we did have this gap here. But what you'll notice is that once we had the close above here and we closed below this low over here, right, we then got a lower high. And this is where gold started to pull back. Now, that right there would have been a little bit of a riskier trade just because, again, we had this gap back here. But what you'll also notice too is that if we even just ignore this part here and take a look at this larger structure, what you'll notice is that we did have a BOS above this high. Okay, so this high right back here, we did have a BOS above here, and then we closed below this low. So this right here gave us an internal change of character. Now, why am I calling this internal? It's internal because if you look at this structure, all right, what's key here is that this low was pretty shallow. Okay, it was pretty shallow relative to this rally. And the way that we can see that is just compare it to what we saw before. Okay, so when you look at this market here, you had the rally up back here. Look at this pullback, right? This was pretty aggressive for a pullback, right? And then you had the move up here. All right, so let's move over to this price action. And you can see we had the low down here. We had the market move up and then pull back pretty aggressively once again. And then over here, what you'll notice is that this pullback, okay, again, relative to this rally was very shallow. So this is where traders can get themselves in trouble because they see a change of character like this here, and they think that all of a sudden this is now going to be bearish and reverse lower and come down here and take out some of these lows. And while it could, okay, the point here is that this low right here, okay, this low could also just be the low within this rally. Okay, so run up here, and then we have the pullback, and then the continuation. Now, what's going to be key for gold though, okay, what I think this is going to come down to is next week, obviously, what happens with the US dollar is going to matter as well for gold. But what we see here next week relative to this structure right here, so high up here, down here to the low. So you can see too that this was right off of the 50% of this range. And this up here, again, is going to be our premium. So if I'm going to look for shorts, if I'm going to treat this as a change of character to come back there and target some of those sell side imbalances, then what I need to see here, like everything else, I need to see lower time frame confirmation. So first of all, you can see we have this imbalance back here, right? Displacement down, and we do have some imbalances here for gold. Okay, so looking at the 4-hour time frame, you can see this here where this level right up here, this is a fair value gap off of this low. So areas like this up here, I think are going to be key for this market, because next week, if we were to see gold come up here and give us that lower time frame shift that I've been talking about throughout this video, and then start to get that rotation lower, then that of course could mean that this back here is a true change of character, and this could send gold lower. Now, what this is going to come down to, like I said before, is the US dollar. A lot of that's going to hinge on the US dollar and what we get there. Okay, but ultimately, I think that areas like this up here, right around 5,300 for gold, I really think that areas like this are going to dictate what we get next week, whether or not we see gold start to pull back within this range. Okay, so from this high up here, down here to the low, so this high up here, down here to the low, within this range, this level here around 5,300 is going to dictate whether or not we see gold pull back within this range and come back here and target some of these lows, or if we continue to push up here toward this high. Okay, but again, lower time frame confirmation, a lower time frame change of character, or a liquidity sweep of some sort up here is really going to dictate whether we get this here in the pullback, or if we just continue higher up here toward this high. Okay, so inconclusive as of now, but again, keep an eye on 5,300 next week here for gold. All right, so I hope this video helped. If it did, keep it locked in here, subscribe to the channel. Also be sure to check out that free SMC course right here on the screen. Click on that link and join up for free. All you have to do is enter your name and email address. So have a great weekend, and I will talk to you again on Monday.